What I have noticed is that professionals in any field or career have committed themselves to mastering the basics better than anybody else. The basics are very, very essential in trading, right? And hear me out. There's a book called The Power of Habit by Charles Duhigg, and what it does is that it breaks down what a cue is. Then we go through a routine in order for us at the end of it to have a reward or penalty of some sort. What I notice about these successful people is that they notice that our brain tries to find things that enable us to quickly go through a routine in order for us to acquire a reward at the end. And this very same act of trying to quickly go through a routine takes our time, energy, and attention, right? And they notice that immediately when they try to do something new and they hit a wall and they stop. Whenever our brain tells us to stop, and when we immediately stop doing something, is that we don't know what we don't know about the very same thing that you're trying to do, right? And we don't want to exhaust our time, energy, and attention. This is why these components are very important, because our time, energy, and attention is actually drained every time when our brain activity is actually heightened. So what our brain does is that it seeks out habit loops in order to get to a reward at the end. We have the habit of getting out from intense pain and going towards intense pleasure or happiness. So your brain does not want to go through states where it has to lower its time, energy, and attention within a cycle of action due to the part that you don't know, the critical part of life, which is information, right? So here's the hard part of trading. It is going to take so much of your time, energy, and attention due to that each time that you don't know what you don't know, it requires you to go back and educate yourself, right? It will require you to invest time in courses, invest time in learning the very same essentials of trading. And the first thing that I actually realized whenever throughout my journey of trading is that I need to learn the fundamental first. I usually had the habit of actually, let me go to the very complex things, let me rush through the basics in order for me to get to the meat of things, right? I usually had the habit of rushing through maybe a course, right? And in order for me to get to the meat of things, the complex stuff, right? Some of it I may attribute it to the ego. In order for us to gratify our ego, we like to move quickly towards the complex stuff of life, and really realizing that the simple stuff, the simple habits of life are as much complex as it comes. So whenever it comes to trading, we have to realize and we have to know how to read a price chart, right? Let's take for a second. Let's go. Let me go to a blank page, blank screen, right? So when I started out, I had to learn this, and I continually apply this whenever I do my technical analysis, because this is very critical in my trading. Without this, I don't know how to trade. I never trade, right? I had to learn the Dow Theory. The market, you would usually see that the market ebbs and flows, right? Ebbs and flows ebbs and flows, right? So whenever we are in an uptrend, you would see from our the market would go from our starting point, which is at our bottom of the screen, our bottom left of our screen, towards our top right of our screen, and we would have our starting point. Okay, let me bring in my text tool. Okay. We would have our starting point. All right, and then we would have our initial high. Okay, let's type it as IH, right? IH, our initial high, right? And then we would have our retracement. Okay, so we have our starting point, our initial high, as the market formed a resistance, a high point. Okay, then we would have a retracement. Okay, let me delete these. We would have our starting point, we have our initial high. All right, then we would have our retracement or pullback, whichever terminology you use, right? Excuse me. So after having our starting point, our initial high, and our retracement, in order for us to identify an uptrend, we would have to have a penetration of this high and an extension, right? All right, so we have our higher high right here, our higher high. Okay, and then the market would continue with the very same pattern of retracement, higher high, retracement, higher high, retracement, right? And usually what I tend to look for is a higher high, higher close to identify whether the market is going to be going bullish. This is kind of our decision point, right? This is where the market would decide whether it wants to go bullish or it wants to transition into a consolidation, right? So if I do have something like this would give me a sign that the market would want to go bullish and continue with the trend of an uptrend. So what I would look for is a bar that looks something like this. Okay, bullish bar in this case. So let me edit something like this, a wick. Excuse my drawing, guys. I'm trying to be quick right here. So if the market does give me something like this, which is giving us our high, our close, which is higher than our high, then this would give me a sign that the market would want to go bullish and continue with the trend, with an uptrend. But if the market doesn't close above our high and give me something like this, this will tell me that the market is still holding at the very same resistance level and is still respecting those resistance levels. And in order for us to identify a consolidation, we'd have something like this, where the market forms our starting point right here, okay, our initial high right here, then we would get something like this, our retracement, our lower high right here, our lower low right here, okay, then a higher high right here, then higher low right here, lower high right here, lower low. And this would tell us that the market doesn't have a clear direction and is still in a consolidation because it hasn't made its mind up of whether it would go bullish, right, or bearish. And we would have to look for signs of exhaustion and signs of a breakout whenever it breaks our initial highs and our significant lows, and enter into a trend, right? If you were a trend trader, you would identify levels for buying, right? You would buy at this level, right? Probably buy at this level looking for pullbacks. You would buy somewhere right here, buy somewhere right here, and profit at another extension. Look for targets at an extension, right? If you are a counter trend trader, you go against the trend, right? If you are a trend trader, you trade with the trend. If you are a counter trend trader, you trade against the trend. So whenever the trend is up, what you are doing is you are looking for shorting opportunities. You are looking to sell the market. A typical example of a counter trend trader is that you would see an uptrend. The market is ebbing and flowing upside, on the upside, and it's going up. And after the retracement, the market is still going up. You have identified a significant level of structure, and you will be looking to sell at this point, right? Do you see the difference? Right? You will be looking to sell right here. So this is a counter trend trader. A trend trader is still going with the trend, while a counter trend trader is selling against the trend. This is a clear example why trading is a zero-sum game. Whenever somebody is winning, you are losing. Whenever you're winning some profit, somebody is losing, right? And we can all have conflicting ideas at the same time, while at the end of the year we are profitable. But while somebody is losing, somebody is winning at the same time. Learning how to read the price chart, right? The principles of support and resistance, which is a major part of my trading. So I'm gonna take you down and show you, as we get back here at on NZD USD, I'm gonna give you my thoughts on it and how I actually had a conclusion of having a selling opportunity and while preparing myself up for a buying opportunity at the same time, right? As you look at NZD USD on the daily time frame, what you would notice is that price has been consolidating for a while. As we go back in the past, right? Price has been consolidating for a while. Price made our support levels right here, okay? After coming right here, we got our resistance levels right here. Price respected these levels of structure, and this is a classic case of a accumulation and distribution, right, where the market has been ebbing and flowing, and it gets to a point where it consolidates and it accumulates some of the liquidity in the market in order for it to punch out. And then after a certain point, price gets exhausted and actually does consolidate again and distributes and finally breaks down. And as you could see, price as it breaks down, we set ourselves for a trend continuation trade, right? As you see, as price has been ebbing and flowing, we have been getting our 3 drives pattern. We have been getting lower lows, lower highs, retracement, lower lows, lower highs, retracement. So we have our lower low right here, our retracement, our lower low, right? A pattern of a lower low and another retracement. And what we get right here is that we have another low right here, okay, and then another retracement. And as you would notice is, if you would notice, our lower lows, our lower lows tend to give us a retracement where we had our previous lower lows. In this case, we had our lower low right here, which the market gave us a support point right there, okay, and then the market gave us a new low, right? So I highlight that new low. The market retraced back, look left, to our previous low right here. And this is a very, very powerful technique that you can use where in your trading, in predicting, in your predictive analysis, right? And as we have been having a continuation of that pattern, you would see our previous low, okay, the market is sitting at our previous low, giving us a resistance right here. So as we've been having a series of lower lows, lower highs, lower lows, lower highs, what we want to, if you are a trend trader, what you would want to set yourself up for is an opportunity to sell short, in order for you, in anticipation that the market would continue forth and at least retest these lows or extend further down, right? So as a counter trend trader, what you would look at is this low right here, and look at where the market would have a next hiccup. Let me delete this first, guys. Excuse me, guys. I have a habit of deleting my drawings. I kind of like a clean chart, right? Right. So I would have to see any type of support or resistance confirmation of that reversal zone, so in the past. So let's check out whether price has actually respected those levels right there. Actually we did. You would see we have support, okay, then it flipped and we had another resistance right here, okay, we have resistance, flipped again, and had our support. As we go back to the past, we have some level of structure, but it's invalidated. Okay, at least we have at least 4 touches. So I'll confirm this level to be a valid reversal zone. Okay, now that I have identified a valid reversal zone on a downtrend, I will be looking to set myself up for a buying opportunity soon as price hits these levels of structure. So all of you counter trend traders, all you are doing is actually you are waiting for price to actually extend down, further down to these levels of structure, and you'll be looking for a reason to enter long, whatever rules you may have to be going long right here. Remember, we are predictive on our analysis, but we must be reactive on our execution. I'm gonna be going through a trading opportunity of going short, as we have identified a potential level to be going short, right? We have a big momentum bar right here, okay. I'm gonna bring in my Fibonacci retracement tools. Okay, let me bring in my Fibonacci retracement from our swing high right there back down to our swing low. See whether we have some retracement level. Okay, we have our 618 retracement up at this level of structure. Okay, we have our 50% retracement right there. Let's check this leg again, and then we have our 786 at this level right here. Okay, so if I would do this, okay, confirm these two levels right there. So we have a 786 retracement right there, aligning with a 618 retracement right here, aligning with a shorter term swing of a 886 retracement right here, and 50% retracement, a little bit nearer than a 786 retracement. I wouldn't call it confluence though. So what I'll be looking to get right here is a retracement back up, a retest actually back up to this level of structure, and I would like to have a disparity of a bearish divergence, right? A disparity between price action, where we have lower highs on our price action while we see higher highs or equal highs on our bearish price chart, right? So far we have a leg that gave us an exhaustion, which is we were overbought at that point, and I'll be looking to take a short opportunity as soon as price does give me a lower closes as it hits this top right here, giving us a double top. So my shorting position would look something like this. With stops, I would have to calculate my ATR as soon as price does hit those levels. But say that we have a 10 pips ATR, then we would have a 66 pips stop loss on this one. All right, and then we would have first targets 85 pips worth of reward, and second targets would be at this low right here for 159 pips. You need to figure out first what type of trader you are in order for you to be comfortable with your trading. I'm not a true trend following trader, so I'll be shooting for a I will not be shooting for an extension. I'll be shooting for a retest of these lows right here. Safer level for stop for targets is at this 81 to 85 pip worth of reward range, and I'll be taking half of my positions right here. So I'll be taking a stop and reverse position. By stop and reverse position is that once I take my profits right here, say that price that does eventually give us a double top, lower close, and bam 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 goes down, and whoop whoop, we won. And I'll be taking a long position as soon as price does hit this level right here, with the valid signs for execution, which is a double bottom right here and a high close. I'll be looking for taking a position in anticipation at least for a retest down up here right here at 66.22s